Hey there, real estate investors. In today's video, I'm going to talk about how to protect your investments by managing risk effectively. First up, let's identify key property risks. Examine the property's condition, deferred maintenance, and occupancy rates. Imagine the financial impact if you had to cover unexpected repairs or faced higher vacancy losses. It can really hit your cash flow and profitability. Next, consider market risks. Research local and broader market conditions, job growth, rental demand, interest rate forecasts. Estimate how changes might affect rent levels or vacancy rates. This gives you a clearer picture of potential fluctuations in your returns. Then, assess financial risks. Look at your financing terms, interest rates, and leverage. Calculate the effect of interest rate increases on your monthly payments and overall cash flow. This helps you understand your exposure to financing risks. Now let's talk mitigation strategies. Create an emergency reserve fund with 3-6 months of operating expenses. This covers unexpected vacancies, maintenance costs, or emergency repairs. Review your insurance policies and consider additional coverage like flood or earthquake insurance if needed. Think about hedging and financing adjustments. Fixed-rate loans reduce exposure to interest rate fluctuations. If you're using adjustable rate financing, explore options like interest rate caps or swaps. It's also essential to evaluate and adjust your investment strategies. Perform sensitivity analysis to test different scenarios like higher vacancy rates or rising expenses. This shows the impact on your net operating income and cash flow. Adjust your strategies based on your risk tolerance. If rental income is volatile, diversify income sources or focus on tenant retention to reduce cash flow variability. Finally, implement ongoing risk management practices. Reassess risks regularly, especially if market conditions change. Track market and economic trends and adjust your approaches as needed. Engage with risk management experts, real estate attorneys, insurance agents, or financial advisors. Their insights can be invaluable. Document and review your mitigation plans periodically and always plan for exit strategies. Remember, effective risk management is key to protecting and growing your real estate investments. By identifying and mitigating risks, you can build resilience and enhance stability. Keep assessing and adapting to stay aligned with market dynamics and investment objectives. Thanks for watching and happy investing.